Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So it's a new week and it's full of opportunities. So there is a lot of stuff that you're expecting to be happening this week. So good morning, Maurice, and thank you for joining the session. So the very first thing, or the very first highlight of the week, is that over the weekend, the US President Biden was able to negotiate a deal with House Speaker Kevin McCarthy. And now the worry about the US debt ceiling is behind us. So the bill has not been passed yet, but having this agreement in principle basically implies that there will be little to no resistance in Congress. So we'll be expecting the bill to pass through this week before the US gets to the X date, which is expected to be the 1st of June. So going forward, we'll be expecting markets to be reacting to that information. So the other key highlight of the week is one, today is literally an international bank holiday. So we will be expecting little to no volatility in the markets today. So I seem to be having very slow internet. So let me try and fix that. All right, let's proceed. So hi, Joe. Hi, Esther, Caroline, Patrick, Joash. Hi, guys. Thank you for joining in. Don't fail to touch on gold. Yes, definitely I'll be checking on that. So now that we know that the debt ceiling negotiations are over, the key focus for the week remains the non-farm payrolls. So this is the NFP week. So as you all know, every first Friday of the month, this is when we get to see the US jobs data, and these can cause a lot of volatility in the markets and as well as create a lot of trading opportunities. So as mentioned, today is an international bank holiday. It's the summer day. So most of these banks will remain closed. It's called Wheat Monday in Switzerland. If you check in the US, comes by a different name. So observance of Memorial Day in the US, and if you check in the Eurozone, in Germany, in this case, it will be the Wheat Monday and so on. So the idea is all of these banks will be closed. That is in Switzerland, in the UK, Eurozone, in the US. So we will be expecting very little volatility. So I expect a lot of markets to be ranging today, not moving particularly in any direction, just sideways momentum. So unless something big was to come up, then it's generally a quiet day, and some traders will literally take a break and wait to trade once the markets resume volatility on Tuesday. So tomorrow we'll begin with building consents, or basically building permits for New Zealand. Then you'll see BRC shop index in the UK, Japanese jobs data at 2:30 a.m., then building approvals in Australia before we look at the GDP for Switzerland. So later on, we'll be looking at inflation data for Spain at 10 a.m. And then we move on to CB consumer confidence data for the US, a speech from Reserve Bank of Australia, Governor Lowy. This will be at 2 a.m. on Wednesday. Then we'll look at retail sales. That is Japanese retail sales year over year. Before we focus on Australian inflation data, which is expected to drop to to rise to 6.4%. So we'll see some couple of Chinese data, manufacturing PMI, as well as services PMI, before we focus on German preliminary CPI, or consumer price index, Swiss retail sales, then ECB financial stability review, before we look at GDP for Canada. Then later on, JOLTS job openings. SNB Chairman Jordan will be speaking at 6:05 p.m. on Wednesday. FOMC member Haka and Jefferson will be speaking at 7:30 and 8:30 p.m. on Wednesday before we move on to Thursday. So as you can see, it's I would say it's a technical trader's paradise when we don't have a lot of big news announcements happening in the markets. So we'll also be looking at the overall inflation data for the Eurozone. That is the CPI flash estimate. This will be on Thursday at 12 p.m. And then once we get to Friday, this is when we'll be expecting a majority of the volatility. So on Thursday evening, there's ISM manufacturing PMI for the US. So this is also very important news, can cause some volatility, but the most important one will be the non-farm employment change on Friday, the 2nd of June, where we'll be looking at the US slowing down in terms of the wage growth rate at 0.3%. We'll be expecting a lower number in terms of non-farm employment change, and unemployment rate is expected to rise to 3.5% from the previous reading of 3.4%. So if you're a technical trader and you enjoy technical trading, technical price patterns, then this might be your best week. So with that in mind, let's try to get to understand what happened during the Asian session. So as part of their debt limit agreement, I'll try and share this so everyone can see. President Joe Biden and House Speaker Kevin McCarthy reached a compromise on hotly contentious issues relating to government spending and aid to the poor. They now have to persuade parliamentarians from both parties to approve the arrangement. So the US economy already faces challenges from the highest interest rates in decades and restricted access to credit, in addition to the limits on government's expenditure included in Washington's agreement to raise the federal debt ceiling. So after securing a convincing re-election victory on Sunday, President Recep Tayyip Erdogan, this is the Turkey's president, focus now switches to the choice of a new government, which could herald changes to the economic policy mix that many believe is unsustainable. So after Erdogan won the election, he is about to form a new government, and he has already been congratulated by Biden, by Rishi Sunak, by Putin, Zelensky, and many other presidents. So oil prices increased after President Joe Biden and House Speaker Kevin McCarthy tentatively agreed to raise the US debt ceiling over the weekend, potentially preventing a disastrous default. So we know that the US is looking to suspend the debt ceiling limit for 2 years. And if this was to be implemented, then it means that the Fed would literally have enough space to print as much money as they want. And this is expected to be quite bullish for stocks. So I will be expecting to see stocks responding positively to the debt ceiling negotiations this week, where we could be seeing prices moving higher. However, there's also the alternative case where stocks are already priced higher. They were trading really high, especially for the NASDAQ and the S&P 500. So it could also be a case of buy the rumor and then sell the news, where the markets were really pumped up. And now after the announcement of a debt ceiling agreement, then we start seeing stocks pulling back down for a while. So that you have to consider that going forward for the day. So that being mentioned, I'll be looking at several price action patterns. So let's start with the first suggestion that we got in the comment section, and this is gold. So this is what we have been seeing with the price of gold. So it was a market that was trading in a bearish, I would call this a bearish wedge, market oscillating between two trend lines before it formed this support. This support basically ran for a couple of days, about 4 days. And then on the 5th day, you had a big break and the market went back up and then down, up, down, up, down. And from what we are seeing here, from the price action pattern, it's clearly a market that is consolidating inside a triangle. So the triangle can be described by this upper trend line on H1. And on the lower side, you can see a connection between this low, and these other lows. So this is what we are seeing as the consolidation in gold right now. So a big move last week on on Thursday, then on Friday, some reversal, but we didn't get to the previous high, drop, but we didn't get to the previous low, and the swings are getting smaller and smaller, and clearly gold is consolidating. So as I mentioned, we will be expecting very little to no volatility in the markets today because of the bank holidays and a lot of activity to be starting from tomorrow. So there is a good chance we'll be seeing some form of breakout happening outside the triangle tomorrow. For the majors, if you look at Euro USD, it maintains the same activity along this technical pattern, which is basically a resistance level that has been holding on so well. So if you've been following, then you know that these have been instances to look for short selling positions, and we just bounced off the upper trend line. So now we are on our way downwards. So there is a good chance we'll be testing Friday's low, which is somewhere around 1.0746046. So there's a possibility we could be seeing the Euro USD dropping further back downwards. So as for the dollar index, it remains strong. It has been quite strong for the last 3 weeks straight. So just the dollar gaining and gaining against other currencies. And this week, we have begun quite well with the dollar index attempting to make a pullback. And after making that pullback, you can see what is playing out here as a strong bounce and the dollar making a recovery. So we could be seeing the dollar being strong against other currencies for the better part of the day. So for pound USD, an attempt to go up was met with resistance here at 1.23924 on Friday, pulled back downwards and then went up, and then now you can see it's trading down lower. So the strength of the dollar could be the dominant factor for the day. So we could be seeing some further downside pressure on pound USD pairs. So as we all know, these sessions are not financial advice. They're not a recommendation to trade. So you should always do your own due diligence and make your own informed decisions, as well as practice proper risk management. So New Zealand USD also trading in a very slow manner. So as for USD CAD, this was our technical price pattern. So we had this particular triangle here. Eventually, the market was able to break to the upper side, pull back and retest this area, and then rally to our first target, and then all the way up to our next target. So if you go to the 4-hour chart, you notice that our next target was the base of the pattern here, or the top of the pattern. So the market rallied all the way up, and once we go to that area, you can see there was some form of profit taking. Price started pulling back downwards. So as long as the Canadian dollar remains strong, we could be seeing price dropping to 1.35628. But then also a retest of this area is still in play. So it depends on the strength of the dollar. So there is also some volatility coming into the markets, in the oil markets. And of course, we know it also influences the Canadian dollar. So if oil markets remain strong for the day, then we could be seeing the price dropping further down to this support of 1.35628. So USD JPY remains fundamentally strong and bullish. So clearly, you can see the strong momentum since January of this year. So it's almost like we are making a U-shaped recovery from this pullback here. So the fundamentals remain inclined towards a very strong dollar and a weak Japanese yen. So from what we are seeing here is the market pulling back downwards and finding a very fundamental support along this area here. And we could be seeing the USD continue to recover against the Japanese yen. So the early morning top seems to be a nice intraday target. So for Audi USD, still some sideways momentum, not very interesting. And then for US 500, market jumped all the way up and then pulled back downwards, didn't manage to close the gap completely. So nothing much is happening here. So I wouldn't say today is the best day to trade indices. So I would stay off until volatility resumes tomorrow. So for UK oil, there was a big jump here after the debt ceiling negotiations reached an agreement. Also notice that we had just broken outside this triangle. So on the 4-hour chart, the market was trading inside this triangle. So last week, we broke towards the upper side. There was a first retest and then a second retest of the lower trend line. And now it seems like the market is now on its way to the original price action pattern, targeting the base of the pattern here. So the pattern is a symmetrical triangle. So if the breakout is to the upper side, then we expect the next leg up to be straight up to $80.467 per barrel. So we'll be on lookout to see if those opportunities appear. So the market seems to be struggling to close the gap, but then there's also the sign that we are seeing long lower tails indicating potential rejection of lower prices. So break towards the upper side would be very interesting to trade, since we already have a confirmed break towards the upper side. So the expectation is that oil prices keep pushing higher. So that's it for today. Thank you, everyone. Thank you for taking your time to join in. And I hope to see you guys on the next session. That will be tomorrow. So on Tuesday, we normally have 2 sessions. One is at 11 a.m., the usual market snapshot series. Then on Wednesday, on Tuesday at 4 p.m., we will be having what we call the markets at a glance series. And on this episode, it happens at 4 p.m. We try to understand what is currently happening in the markets and try to speculate on where the market could be headed or at the open of the New York session. So good question from Joseph. Morning, watching from Vika. Yes, hi, and say hi to the traders in Vika. Your view on gold overall trend, is it bearish or bullish? For now, it seems to be bearish as a result of the debt ceiling negotiations. So the fact that now we are seeing the markets being very positive about President Biden reaching an agreement with Congress, then we could be seeing some further downside happening in gold, maybe for the next 1 month before we resume the bullish momentum. So is there a possibility of the Kenyan shilling to start strengthening against the USD? Yes, there's a good chance, but not right now. As per now, the US is still tightening. The markets are pricing in another rate hike by the Fed. So in this case, the short run is that the Kenyan shilling keeps weakening against the dollar before the dollar floodgates are opened. Maybe in Q3, Q4, then that's the period when we'll start seeing some recovery. Morning, Rodney. A good question. Does it make any difference when entering a trade, let's say buy at 0.01 5 times at the same time, or buy at 0.05 just once? Yeah, there's no difference in terms of the commissions you pay or the money you earn or lose, depending on the outcome of your trade. So the lots are the same. So if you do it individually, it's better because you can close partial profits. If you just do one trade, then it's a little bit difficult to close partial profits. So one last comment is about pound yen. So let's check that and then end the session. So the question is about pound yen. So what we are seeing here is a very strong pound against the Japanese yen. So there was this period where the market was predominantly trading within this range. So we were moving up and down, up and down. So on Friday last week, there was a break. Market pulled back to retest the area, then continued trading higher. So for the open today, there was a gap downwards. Market closed the gap immediately, pulled back down, and now we could be seeing the pound being really strong against the Japanese yen. So perhaps we'll be seeing some further upside to retest the day's high. But then if the bearish momentum, then the key price target would be on the trend line, so around 172.9. So I think it's a matter of wait and see. There seems to be a lot of noise in this chart. And by noise, I mean the alternating candlesticks. So you can already see we're getting a red, green, red, red, green, red, green kind of candlesticks. So if you move to a smaller time frame, then you see it's basically implies some form of consolidation. So I would be very watchful of the day's lows and also the day's highs, try and understand where the market might be headed next. So since we're in a lot of bank holidays, then I expect very slow price action to be trading within the 2 trend lines up until you have a clear directional bias. And this could be happening towards the end of the day, or maybe tomorrow once the volatility resumes. So thank you very much, guys. Thank you for your time, and I hope to see you on the next one.